In 2026, several major policy and regulatory changes are reshaping the landscape for small businesses, startups, and government contractors across the United States. These changes impact access to capital, federal funding opportunities, compliance requirements, and even how businesses use emerging technologies like artificial intelligence. In this video, we're breaking down 4 key updates you need to know. SBA loan restrictions for non-citizens, a new national AI legislative framework, the reauthorization of SBIR and STTR grants, and reforms to federal diversity contracting programs. Let's start with access to capital. As of March 22, 2026, the Small Business Administration has reportedly stopped approving loans for legal permanent residents, also known as green card holders. This means that SBA-backed loans are now limited to U.S. citizens only. For many small business owners, SBA loans are one of the most accessible forms of capital, offering lower interest rates and longer repayment terms compared to traditional financing. By restricting access to citizens, this policy could significantly reduce funding options for immigrant entrepreneurs who have historically played a major role in small business formation. From a business perspective, this creates several challenges. Fewer financing options for certain founders, increased reliance on private lending or alternative financing, and potential delays in launching or scaling businesses. For lenders and advisors, this also introduces new compliance requirements when evaluating borrower eligibility. The White House has recently introduced a national AI legislative framework designed to unify how artificial intelligence is regulated across the country. The goal is to prevent a fragmented system where each state creates its own rules. For businesses, especially small businesses, this is a significant development. Currently, about 82% of small employers are already using AI tools in some capacity, whether for marketing, operations, data analysis, or customer service. Without a unified framework, companies could face a patchwork of regulations that vary from state to state, increasing compliance costs and legal complexity. This new framework aims to standardize AI governance at the federal level, reduce regulatory uncertainty, and make it easier for businesses to adopt AI technologies confidently. For small businesses, this could lower compliance burdens and encourage further adoption of AI-driven tools. However, it also signals that more structured oversight is coming, meaning businesses should begin preparing for formal AI governance requirements. On March 17, 2026, the House passed the reauthorization of the SBIR and STTR programs. These programs are critical sources of funding for startups and small businesses engaged in research and development. They provide non-dilutive funding, meaning companies can receive capital without giving up equity. Prior to this reauthorization, there was uncertainty about whether these programs would continue. That uncertainty created challenges for startups planning long-term research projects. With reauthorization now passed, businesses can move forward with greater confidence in pursuing federal innovation funding. For companies in technology, healthcare, energy, and advanced manufacturing, this is a major opportunity. It reinforces the federal government's continued investment in innovation and small business research. Another major change comes from the U.S. Department of Transportation, which has announced reforms to the Disadvantaged Business Enterprise, or DBE, program. Under the new rules, race and gender can no longer be used as factors in determining eligibility. Instead, all participating businesses must be recertified based on revised criteria. The DBE program has historically been used to support minority and women-owned businesses in accessing federal contracting opportunities. This shift represents a significant policy change. For businesses currently certified under DBE, this means they may need to go through a recertification process, they must meet updated eligibility requirements, and they may face increased competition within the program. For agencies and contractors, this also changes how supplier diversity programs are structured and evaluated. These 4 policy changes highlight a broader trend in 2026. There is increasing focus on tightening eligibility requirements, standardizing regulations, and reshaping how federal programs support businesses. For small businesses, startups, and government contractors, staying informed is critical because changes in funding access, compliance requirements, and regulatory frameworks can directly impact growth, strategy, and long-term success. If you're operating in these spaces, now is the time to reassess your strategy and ensure you're aligned with these evolving policies.